Good morning in the Mumbai News Center. I'm Sonal Bhutra and you're watching Power Breakfast. A lot of cues to catch up on. We got a lot of big news overnight as well. So let's talk about them. But first up, let's take a look at the Asian markets. Largely mixed today. We got the Chinese factory activity data, which missed estimates. It came in lower than estimates. And that is something which is putting pressure on some of these markets. But apart from that, look at Hang Seng. It's up around 0.5%. We have Taiwanese index, which is up around 0.3%. There's Kospi at 0.5%. Hang Seng 2 is up 0.2%. So largely green with some shade of red in some of the markets. Exchange Nifty, as a result of all of this, is indicating that the start could be tepid for our own markets, a downtick of 11 points, though we have been breaking new records every day. Let's see which way things go for our own markets today. Let's talk about the U.S. markets. Wall Street ended Tuesday's trading session mixed, with the Dow Jones closing flat, the S&P 6 points lower, and the Nasdaq Composite closing with cuts of 65 points. CNBC's Bertha Coombs gets us a wrap of all the action on Wall Street.
It's a fairly quiet day on Wall Street as investors await government reports on the nation's economy, read on GDP, and the jobs report coming on Friday. The Dow ended in the green, but just barely. The S&P closed down less than 0.2%, while the Nasdaq finished with a loss of 0.6%. And we've heard about a lot of layoffs, but after just 3 months on the job, the CEO of AMC Networks is stepping down just before the company told employees that there would be large-scale layoffs coming. The cable programmer with shows like The Walking Dead and Mad Men isn't saying just why CEO Christina Spade is leaving. That's the action from the U.S. market. Now back to you in Mumbai.
Okay, staying with Wall Street, let us get you some important opinion coming in from Jeremy Siegel of University of Pennsylvania, Liz Ann Saunders of Charles Schwab, and Ed Yardeni of Yardeni Research. Listen in.
The Fed is really very data dependent. I mean, I've mentioned before, they kind of laugh when they say all through next year, we're going to, keep the rate tight all the way through the end of 2023. I do expect a 50 basis points because I think the price data is going to look good in the December meeting. I really hope that they really just pause after that and let the tightness that they've already induced and the decline in the money supply. By the way, we got it last Tuesday, the 7th consecutive month of decline in the money supply, the biggest 7-month decline since World War II. I mean, this is a very restrictive policy that if they try to keep this restriction going through next year, a recession is virtually 100%.
The market is still facing some of the obvious ones, including inflation having started to come down, but certainly not anywhere near the target for the Fed. But we've had the offsetting positive on the services side, and that's rolled its way through the inflation data as well. I actually think it's probably going to roll through the earnings deterioration from a sector-to-sector standpoint. So I think the answer to recession is yes. It may just be more of the rolling variety than your more standard sort of bottom falls out all at once.
The yield curve is widely believed to be a great predictor of recessions, which it has been. But I think the real logic of how the yield curve inversion works is that the yield curve anticipates financial crises. It basically says if the Fed continue to raise short-term interest rates too much, we're going to see something break. What the yield curve may be anticipating is that we're going to get a surprisingly sharp drop in the inflation rate. I think we're definitely going to get that in durable goods. I think we're going to have durable goods deflation next year, which is kind of a more typical scenario for durable goods prices. Services are going to continue to be a problem.
All right, that's all the global market action. Tepid cues, so to say, Asia largely higher, but how will these overnight cues impact our own markets? We have our research team to tell you just that. What is the trade setup looking like today, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Vivek, let me come across to you first. What are the market cues that we need to focus on today?
Well, good morning. Quite a lot of data points to keep an eye out for today. Also keep in mind you'll actually be seeing the rebalancing flows come in as far as the MSCI is concerned as well. So MSCI linked stocks will also be in action. But overnight, when you're talking about the Qs, there's been a slightly muted set of Qs. Multiple reactions awaited as far as the Fed share is concerned. So most of the US markets ended lower, significantly off the session lows. However, European markets too largely lower in the session, and gold prices went up almost 0.5% in yesterday's trading session. Crude continued its up move for the second straight session as well. And when you're talking about some of the key events to watch out for as far as the Indian markets are concerned, you have an IPO opening up today, Unipart's Dhanraj Crop seeing a strong subscription. On the second day, you're also seeing the important event of the Kirit Parikh committee actually going ahead and giving the gas pricing report as well, the Q2 GDP data, the core industrial data, and the MSCI rebalance. All of these are important data points that markets will be tracking, and Indian markets continue to trade near lifetime highs. Asian markets at this point of time, subdued start, and also LGX Nifty is indicating a slightly gap down start for the Indian markets.
Gap down, yes, 10 points lower on the SGX Nifty today, so a mild negative is what it is indicating. But let's talk about all the stocks in news today. Over to Surbhi, who's joining us now with that list. Surbhi?
I have a couple of stocks on my radar today. The first one is Gland Pharma, where it enters into a put option agreement to acquire 100% of Sensex Group for 120 million euros. Maximum consideration payable is almost 210 million. It is expected to be completed by March 2023. Next is Inox GFL Group, which initiates strategic action to deleverage its balance sheet, in which Inox Green, as a part of this initiative, pays an aggregate amount of close to 250 crores towards reducing its debt, and Inox Wind pays close to 160 crores towards reducing its debt. Further debt reduction in both companies is underway. Next is Biocon. Biocon Biologics completes acquisition of Viatris Global Biosimilars business. IDFC, it gets SEBI approval for change in control of IDFC Mutual Fund. And lastly, KIMS, which it makes further investment by acquiring close to 8% stake in Aganodai Hospitals Private Limited. The company now holds 66% stake in the hospital.
Okay, that is all about the stocks and news today. Let me go across to Manglam, joining in with all the cues from the F&O space. Hey, Manglam.
Good morning. So we're consolidating around record highs, and that's what we saw the last couple of trading sessions as well. Yesterday, the Nifty was meandering around that 100-point range. Levels closer to that 18,700 mark were being sold into, and levels closer to that 18,550 mark were being bought into. The FIIs, they continue to buy in the cash market. That's a good thing, though the DIIs yesterday sold about 744 crores. So as a result of which, the net inflows were just around 500 odd crores. But that's all about the directional cues coming in, because there was mild purchase in index futures as well. 340 odd crores did not change the needle too much, because the FII longs still at 73%, with shorts at 27 odd percent. And index options as well, there was unwinding on both sides, calls as well as puts. And at the same time, even if you take a look at the short positions, there was unwinding. So that's telling you that the FIs are winding down as far as directional cues are concerned. So that is something we will be monitoring. As far as individual options are concerned, 18,500, those call writers actually felt the heat yesterday as the market moved higher. And as a result of which, as you can see, there were 17 lakh shares unwound on the short side. So short covering seen there. 18,600 put writers were extremely active for a premium of 50 odd rupees. That's telling you that the bulls are eyeing support at 18,550 odd levels, and 18,700 call continued to see some writing for a premium of 27-28 odd rupees. So that's telling you that the bulls, they see support around 18,500 to 18,550, whereas bears believe that 18,700 to 18,750 is their zone. So there may be a bit of a congestion out there. The only problem is the way the mid-cap index is underperforming, and as that happens, we do have a lot of stocks in F&O ban as well. Case in point, PNB, which entered the F&O ban early days in the series. We already have BHEL, Delta Corp and India Bulls Housing Finance in the F&O ban already.
All right, we'll watch out for those stocks. Manglam, Surbhi and Vivek, thanks a lot for joining us, prepping us up for the trading day ahead. Time for a break now, but before that, some summer news coming in this morning. Vikram Kirloskar, who is the Vice Chairperson, Toyota Kirloskar Motor, and one of the stalwarts of India's automotive industry, passed away at the age of 64. According to initial reports, he suffered a massive heart attack. Vikram Kirloskar was last seen at the new generation Toyota Innova High Cross unveiling event in Mumbai on the 25th of November itself. Welcome back. It's time to talk about some macro cues that we are tracking this Wednesday morning. The second quarter of the July to September GDP will be announced today at 5:30 p.m. A CNBC-TV18 poll sees this coming at 6.4%, down from 13.5% in quarter one. Lata Venkatesh is joining us with her take and what is expected this time. Lata.
Yes, that's right. The second quarter GDP is expected to come in at 6.4%, higher than year-ago levels. Remember, the first quarter was 13.5% higher, but it was below RBI expectation. At 6.4, it will be more or less in line with what RBI expects. A year ago, of course, the growth was 8.4%. Now, the 6.4 is the growth. The actual output is expected to come at about 38.05 lakh crore. And if that number is right, it will be about 3.2% higher than first quarter, which is a very good number. Second quarter normally comes almost in line with first quarter because it's a monsoon quarter. But if it comes at 38.05 lakh crore, it would be a very good number. Going within the GDP, agriculture is expected to grow by 3.2%, much like last year, second quarter. What will be a disappointment will be manufacturing. It's expected to not grow at all. It could be a 0 or maximum, less than 1%. That's because a lot of industries were affected by lack of coal, lack of fuel, lack of raw material. The services sector is the one that will do very well. Trade, hotels, financial services, public administration, all of them are expected to come over 8%, maybe 8.5 to 8.6%. When it comes to GDP from the demand side, the private consumption is expected to be very good at 12% higher, and government consumption slightly more modest at 9.5% higher. Gross fixed capital formation will be up 20%, but that's more because the base over the last 2 years has been a bit weak. But let's wait and see what the overall number comes at.
Yes, we'll wait and watch for that number. Malata, thank you so much for what to expect from the GDP data today. Now, moving on to the big news we got from the aviation space last night. Singapore Airlines and Tata Sons have decided to merge Air India and Vistara. The move will create a new giant in the Indian aviation industry. Singapore Airlines will get 25% in the merged entity, for which it will give up its 49% stake in Vistara and pay the Tatas $250 million in cash. Madhya Mujawar is here with more. Madhya, what are the contours of the deal and how will the combined entity stack up in the Indian market?
This has been the most awaited announcement in the Indian aviation space, and the deal is finally done. Singapore Airlines and Tata Sons have agreed to merge Air India and Vistara, and as part of the transaction, Singapore Airlines will invest $250 million in Air India. It will get 25.1% stake in an enlarged Air India group. The merger is expected to complete by March 2024, subject to regulatory approvals. SIA has also agreed to infuse additional cash if required, which comes to up to $615 million, payable only after the merger is complete. So what does the combined Air India now look like as things stand? Let's look at the market share. In terms of market share, Indigo will continue to be the dominant player. Going by the current numbers, in October, the combined market share of the Tata-owned brands stood at nearly 26%. Indigo, meanwhile, enjoyed a 57.7% market share. So even together, the market share will be half of Indigo's. Next, let's look at the size of the fleets. As things stand, Air India, Air India Express, Air Asia India and Vistara together have 200 aircraft. Indigo, meanwhile, has 245 aircraft in the air. Indigo has also been carrying more passengers on its aircraft. From January to September this year, Air India Express, Air Asia India and Vistara together carried 3.4 crore passengers, while Indigo carried 5.3 crore passengers. That's a difference of nearly 2 crore passengers. Let's move to domestic passenger load factor. This metric tells us how much of an airline's passenger carrying capacity is being utilized. Indigo has a PLF of 82.1% individually. Air India, Air Asia India and Vistara enjoy a higher PLF than Indigo, which averages out to 84.1%. Lastly, I checked the on-time performance of these airlines in the domestic market. On this parameter, Tata Group's airlines have taken the top 3 spots in October. This is also the first time Air India has topped the on-time performance ranking in many years, with an OTP of 90.8%. Indigo has slipped to number 4 with 87.5%, behind Vistara and Air Asia India's 89.1%. Now, experts tell me that given how close the operational parameters could be, Indigo will definitely be in for some stiff competition from the synergies of a combination of the 4 Tata brands could generate. And air passengers are definitely in for some interesting times.
Tune into Power Breakfast on CNBC TV18. It's time to talk commodities now. Manisha Gupta is joining us with all the update. Hey Manisha, good morning. Crude prices in focus yet again.
Oh, well, yes, and the prices are off the 13-month lows that we were trading on Monday. So yesterday was a good day, and Wednesday as well has started on a positive note for the crude oil prices. It is about the OPEC meeting which the markets are awaiting for on 4th of December. It could take either direction for the crude prices, but the support also comes in from the fact that the China could be relaxing some more COVID restrictions going forward, and the cases which had been rising at a record level every day also seems to be slowing down in the last couple of sessions there. Having said that, the prices for crude are down by nearly 9% for the month of November, and they're down by nearly 40% from March highs as well. Another area that you should watch out for is metals. Here as well, we have seen good support. The decline in US dollar, the China COVID cases or other restrictions being eased has supported the markets here. Iron ore is trading at a two-month high. Steel is trading at a 1-month high. You have copper prices also trading at a 2-month high. So for metals, the month of November has been positive, and same goes for the day-to-day as well.
Okay, all right. That is all the update from the commodity markets. But quickly, let's take a look at what the Asian markets are doing. Largely in the green yet. It's Nikkei, which is sitting with cuts of 0.6%. We also have the Straits Times, which is mildly in the red right now. But Hang Seng too has slipped actually from the highs. It's down 24 points. When we started the show, it was up 0.3%. So a sharp fall as far as the Hong Kong markets are concerned. Taiwanese index up 0.3%. And SGX Nifty is indicating that the start for our own markets could be in the red. It's down around 20 points as we speak. So maybe some fall from the top is what the Asian markets are indicating. We'll have to see which way things go. We'll take your leave now on this edition of Power Breakfast. Do stay tuned. Bazaar Morning Call comes up next.